Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hinks. Kev, it's time for our cash tag segment. We're going to be showcasing CarMax ahead of its earnings release. Joining us here in studio is TD Ameritrade Network contributor Jenny Horn. And with us from LikeFolio.com is the VP of Research, Megan Brantley. Good morning to both of you. Let's talk some CarMax. Not the only player in this space, but probably the most attention that these companies have ever been has been this year. All the talks of inflation, all the demand for cars, and there's just no supply.
I know, it's kind of the craziest thing because sort of at the start of the pandemic, we saw the automotive sector being one of the worst hit, of course, with these chip supply shortages that have just crushed these legacy autos like a Ford and GM. But CarMax has sort of emerged to be one of the surprising winners. Now, they have their earnings tomorrow morning before the bell. They're up about 1% today ahead of that report, but the street is expecting some pretty significant growth for now several consecutive quarters in a row, with earnings expected to grow about 4.5% from last year on revenue that's expected to grow 28%. So very healthy levels of growth for a company that I think, sort of lost its relevance pre-pandemic and now has become sort of at the forefront of so many investors' minds. Now, stats have actually shown that people are more often opting for new or used vehicles over new ones more than ever over the last year. One reason being to preserve liquidity with some of these ongoing financial stresses and also the heightened levels of unemployment. Also, consumers were less willing over the last year to use public transportation. Plus, you think about ride-hailing services like Uber and Lyft, where you used to be able to take an Uber pool and share it with other passengers. They sort of cut out that option, and they have yet to resume it, at least in Chicago, which I can't necessarily say I miss Uber pool, Alex, but that is, something that would maybe make someone say, hey, I need to buy a car, and what I can afford is a used car. So the growth story in CarMax has been sort of fascinating. A testament to their growth is they opened 2 stores in this fiscal year, and they're on track to open 10 more by year end. And their goal is to push their market share above about 5% within the industry. So they are the biggest player in this space, but they only have less than 5% market share. So something to consider when you think about their growth. Now, for long term, they said they want to sell 2 million cars annually every year for the next 5 years. And that they're expanding also aggressively into their e-commerce segment. And they actually reported in the last quarter that more and more of their customers now are initiating the first steps of buying a vehicle online. So I think for the first time ever, people are getting more and more comfortable actually buying some of these big ticket items like a car online. So investors will welcome sort of any guidance there on their e-commerce push, as that is always something the street likes to hear. Now, one headwind Alex already mentioned, that's the inventory challenges. Even with this crazy demand, they are still sort of unable to keep their lots full, which is something I really never thought I would say. And that is actually segues perfectly into our first tweet, which sort of highlights this doubt. And it was actually in response to, I believe, a previous segment you all did. So our first tweeter was addressing you and Kevin, who said, I like CarMax, but I just sold my car to them for almost what I paid for after 3 years and with 40,000 more miles on the car. They are desperate for cars. Could supply chain issues hurt the bottom line? I definitely think that supply chain issues could hurt their bottom line, but another thing to consider here is that we're seeing used car prices spiking. So while this tweeter said basically that he believes CarMax wasn't making any money on his own vehicle, I believe CarMax is then selling these for maybe a premium, and that is sort of how they're able to grow and make money. But our next tweeter talks about some of the competition in this space because, of course, CarMax is not the only name that has benefited from this crazy car demand that we've seen over the last year. So our next tweeter today says, let's be honest here, the car vending machines are the main reason why Carvana has been successful in the used car business from the beginning. Long Carvana, not CarMax or Vroom. So Megan, I am curious because, we've sort of talked on this show how people are getting more comfortable buying shoes online and jeans and things that you think traditionally you had to go to a store. But call me old-fashioned, regardless of what we see in these trends in e-commerce, I still would have to go to CarMax to buy my car because that is too expensive of a thing to just purchase online blindly. And that's where I say, actually, CarMax has a leg up to Carvana.
Yeah, Jenny, I'm with you. I think if I'm purchasing a vehicle, I'm going to want to drive it before I pull the trigger. But I think that a lot of consumers are at least more interested in initiating that process online, as you mentioned. And we definitely are seeing traction with consumers who are fully completing these auto purchases online. And I think what's interesting when you think about Carvana and CarMax and Vroom, CarMax almost reminds me of kind of the Target Walmart story that we talk about, where now they have more of an omni-channel presence. They have these lots that you can go and you can test drive and you can see the vehicle in person, and they have this digital presence. So they kind of fit both molds for the company, and they're starting to really gain traction with consumers, whereas Carvana and Vroom, those are more digitally focused. And so you can see this kind of shakeout and happiness. And so this is kind of interesting because when you look at this, Carvana is really outperforming. People like their experience with Carvana. I think that a lot of this is people think this is really novel, the ease at which you can buy or sell your vehicle completely online, if that is your goal. And then you have CarMax, who is a little over 10 points behind, but still relatively high, considering for a vehicle purchasing process, right? This isn't one where we would expect to see super, super high levels of sentiment here. But then you have Vroom at the very bottom. So in that tweet that you presented, the tweeter was talking about, we really like more of the Carvana, I believe is what you were saying, maybe not necessarily CarMax or Vroom. But I think that whenever we look at this, we see Carvana and CarMax both outperforming significantly versus Vroom. So whenever we look at this, at least from a consumer happiness perspective, we think both of those two are positioned really well moving forward, especially in this environment where the used vehicle market is so hot.
I am never buying a car, more or less a used car, that I don't sit in and test drive and look at. That is just, that I cannot connect the dots to buy. Yeah, gym shoes buying online. Yeah, not a car. That's crazy. So I don't see that as real competition. Now, Megan, here's the question that I have for you. I look at your used vehicle demand and know that that's directly related to what we're talking about here. Now, I also see it's up big since 2019, but it looks like it's peaking. And there's my thesis for this discussion is we're late in this game, right? In this move, we're late. And Megan, my question is, if there's problems in new cars, which there are, eventually it's going to lead to problems in used cars, which is probably coming down the pipeline. So my question is, does your data show any indication that it's late in this move and we should be more cautious on a stock like this?
This is one that whenever we first got into this name, I think was around June. So our first alert that we put out to members talking about, this chip shortage, this rising demand in used vehicles was definitely earlier this summer. So I think that you're onto something there. However, I think that a lot of automakers have come out and said that they don't see necessarily a resolution to this chip shortage, at least not even in 2021, potentially extending well into 2022. So I think that this is definitely something that could be expected to continue to rise. This used vehicle demand, as you mentioned, yes, it's near all-time highs. It does look like it's starting to level out a little bit, but it's still elevated pretty significantly. And this is one of those scenarios where if you don't have an inventory of a new vehicle to purchase, what other kind of options do you have? And I think so this is pushing a lot of potential new vehicle buyers into the used vehicle market that may not have been there otherwise. So this is definitely a trend to watch, but so far we're seeing this move the needle specifically for the CarMaxes and for the Carvanas of the world that have more of a selection for users to choose from.
Couple things to clarify just to make sure that we're reporting fairly. It looks like there's like a 7-day test own period for the Carvanas of the world. So you do get to drive it for a little bit and then you can bring it back. I want to make sure we say that. But I would also note too that this is sort of an industry that maybe has had a bit of a black eye from its reputation of taking advantage of those who don't necessarily know what they're doing or know a lot about cars. In terms of fairness of pricing and things of that nature. There's always been kind of this negotiation element to it. From the degree of happiness that these companies are getting talking about it, it's showing that they understand this. And if they were, ripping off clients, that's going to come back around. And I think that there's a little bit more of this responsibility element when you're a company the size of these, and that's probably paying off a little bit. But to me also, when you come to something like Carvana versus CarMax, I don't know the exact impact of having the cars in the vending machine. Maybe it cuts down on labor costs, or maybe it's just a way to get some kind of free marketing. As you drive by it, it gets some coverage on financial media because it's interesting. But Megan, CarMax is essentially just at scale what we know already works, which is a car lot and essentially being the marketplace for vehicles. So you can go in there, you can sell your car, and I'm sure many people talk about that, and you can go in there and you can buy a car. And essentially they are that one-stop shop to basically trade a vehicle in or take one out. And that's important because we know that this has a place going forward. As for if it's in a vending machine or on a car lot, to me that's indifferent. It's just about the dollars and cents behind it. And it sounds like from your data that I'm looking at here, this is still a very, very hot market, and that should benefit these companies.
Yeah, I think that this might be a scenario where, sometimes a rising tide can lift many boats. And if we were looking at the boats that we would expect this tide to lift, we would really key in on CarMax and Carvana. I think both of these companies have recorded double-digit year-over-year mention growth, so there's still awareness. Whenever you look at these CarMax mentions, you can almost see there's a little bit of seasonality at play here, but in the case of these CarMax mentions, the season kicked off a little bit earlier than expected, and now it's extending for longer. If you look at the demand mentions for CarMax, the current quarter, the month of September, is actually pacing really, really nicely. And so this is one of those things where we think that the bar is really high because last quarter the company had a great report, and so we think that expectations are very high. Obviously, the stock has also performed really well in the last few months, and so this is one of those instances where when it comes to our signal, we're officially neutral in this earnings just because of how this rate of growth is shaking out. However, long term, whenever we look at all of these macro trends, used vehicle demand, the extended chip shortage, different macro trends that Jenny hit on when it comes to transportation and just needing a car to drive somewhere versus taking public transportation, things of these nature are all working in these companies' favor. So I think that these trends are definitely something to consider as well. And so far, long term, it looks like CarMax is starting to do a really good job of being that kind of omni-channel presence in this market that, if users want to conduct things online, they can, but if they want to come to the lot, they can. So I think that bodes well for the company into the future.
So, Megan, an interesting thing I read is that last quarter they booked about $2,200 in profit per vehicle in the quarter, which was the top of management's expectations. So they are making more money on these cars than ever before. And so it is more expensive for us as consumers, but it's still cheaper than buying a new car, of course. So we're kind of stuck with this is our only option. So I have a question on the long-term nature of this company, really, because we've talked a lot with Andy actually about how there's these massive parking lots in Louisville by you all where cars are just sitting and they don't have chips, they have nowhere to go. So is there any sort of issue, I think, in the long term with new cars actually returning to being sold and these chips maybe normalizing and things eventually hopefully returning to normal, that a CarMax will sort of fall off and it's sort of in this bubble right now with this very unique car market?
Yeah, I think that it's definitely benefiting from this kind of unique scenario that has emerged. And so that's something that we're going to need to really watch. We're going to pay attention to, what is the demand for new vehicles? We do track those new vehicle purchases alongside this used vehicle demand. And it's tough to discern when a user is talking about a new vehicle to them or a brand new vehicle off of a lot. But in general, these new vehicle purchases that we're listening to, those are still down pretty significantly on a year-over-year basis, as the empty lots would indicate, while we see this used vehicle demand rising. So I think that this might be something that we look at whenever this used vehicle demand starts dropping, maybe as new vehicles hit lots. If we start to see those macro trends shifting, let's look and see, is that moving the needle for CarMax? Is that moving the needle for Carvana and even for Vroom? Right now, we're definitely seeing it move the needle in a positive way for these companies, but that could certainly change, as new cars hit lots.
And we'll look forward to that conversation if things do shift here, Megan, in terms of maybe normalization and some of those demand trends. But for now, it seems like still a lot of optimism to be had for this whole entire sector. Thanks, as always, the VP of Research at LikeFolio.com, Megan Brantley.